Hi traders, David here from Wave Trader. So today we are going to have a look at the dollar index and also the major pairs. This is the first week of the month of February, so let's see what we see. I'm currently on the daily chart of the dollar index commodity, and this is what I'm saying. So last week, Friday, some news came out which caused a significant drop in the dollar. Okay, and this affected the various currency pairs in various ways, but we are primarily technical traders, so we are going to look at it from the technical point of view. So I'm just going to skip to the monthly chart and let's have a look at what is going on. So um, if you were to count waves on the monthly chart, starting from here, you could say that we had a series of waves here, which could be 1, 2, 3, 4, and 5, with this as correction, okay, and then the start of a new wave, or we could call this the first wave, all right, second, and because the third wave cannot be the shortest wave, then what we have here is a meandering on the third wave, which in this instance will be highly unusual. So I'm just going to go with the fact that I'm beginning to see a death cross on the MACD here, and I'm beginning to see what looks like a wave top, though we don't have a valid cross of the EMAs yet. So what I'm saying is that even if this were the third wave, which I doubt, it will still need to get down to this level for it to be something of a valid fourth wave, okay? But what I want you to see here is if we take the retracement of this move to here, you will see that we are in the 62 area, just give or take, okay, in between the 62 and the 79, which is perfectly normal. And I pointed out last week in last week's review that we had what looked like divergence, negative divergence that was forming here. So even if the dollar is going to be bullish in the long term, I believe that we have the possibility of the market actually pushing down to this region. Okay, so that's something to consider. Anyway, so that's on the monthly chart. So we are intraday and swing traders primarily. So let's have a look at the most current candle. The most current candle is showing us a bullish situation. Okay, but you can see from here. So we are talking about for the past 4 months we've been progressively bearish. Okay, so what we seem to have here is actually a retracement. Okay, and because we have a dead cross on the MACD, we have to consider the possibility that at least for the next month or two, we are looking at a bearish situation on the dollar. Okay, so going to the weekly chart here, you can see what's been going on, a series of fluctuations, and while it's been a series of progressive higher lows here, okay, higher lows and higher highs. So when we got to the crest here, first we got a wave top and then another wave top, and then we seem to have another wave top that is forming here. So if I were to get a cross, which I don't think will happen, but what I mean by that is I will not get a cross on the EMAs, okay, because you can see what's happening. What we have here is a sort of a bounce, all right, to the downside, but MACD is trending down. We have the divergence situation, which looks a little bit more pronounced on the weekly chart. Okay, so at least for the next month or so, we have to consider the possibility that the dollar is going to fall. Okay, so that should be our bias. Okay, but that doesn't mean that when you get opportunities to buy currency pairs that are paired against the dollar, you shouldn't. Okay, so going down to the daily chart, what do we see here? So on the daily chart, this is what happened. Okay, we had this extreme negative divergence here to the MACD or to the histogram of the MACD, and that pushed the market down. So the what do you call them? We have the technical traders, okay, and then those that follow the news. All right. those guys will tell you one thing or the other about the economy, but I'm not going to talk about that. I'm going to tell you that this is what I see. I see extreme negative divergence, and then you can see the price falling sharply. But now, by going lower to the 4-hour chart, you can see what's going on. So for us, wave traders, this is what we see. We see a very good wave top situation here. And if I were to put my wave calculator, you can see that we've just passed the third target, okay, heading for the fourth, but we are in a region of support here. All right, it was strong resistance here, now it was support, and so we are getting to a region of support. So even though the trend is predominantly down on the dollar index, we have to consider the possibility of a push up. Okay, so we have wave 1, 2, 3. So once wave 3 is consummated, expect a push up in price before the fifth wave commences. So will all 6 targets be filled? I believe so. All right, we just don't know how long it will take to get there. But if you are an investor and you're looking at the dollar, then your bias should be to sell. All right, to sell the dollar. So having said that, we've looked at the US dollar now on its own. So we are going to look at some currency pairs to have an idea of what to expect in the new week. So let's have a look at the euro. And in this instance, I'm going to start again from the monthly. Okay, so what do we see? So the practice of top-down analysis helps to narrow your focus and give you an idea of what to look for. All right, you can't just jump to conclusions because you looked at the daily chart or you looked at the 4-hour or the hourly chart. You have to start from the monthly to have an overall idea. So you can see that this is the opposite of what is happening on the dollar index. Okay, we have MACD giving us, about to give us a golden cross on the monthly chart, and we have a push up here, okay, progressively for the past 4 months. Same thing as the dollar index, but inversely. So what we have here is a temporary push down in the market, okay, and we have what looks like positive divergence going on here. So let's go to the weekly chart and see what we see. So on the weekly chart, you can see that we've had a push up from the low. All right, even though we have this EMA death cross here telling us that we are still in a bearish situation, but previously we had the MACD golden cross here, and so far it's still separated and heading up even though it's weak. Okay, so we're going to go lower and see what we can see. So on the daily chart on the euro, you can see what happened. The same news that affected the dollar affected the euro and pushed the market up. However, we do not have a wave bottom situation as at yet on the daily chart. Okay, we don't have a golden cross on the MACD, we don't have a golden cross on the EMA, we do not have a wave bottom situation. So even though you could have profited massively from this move on Friday, you are still going to have to expect some fluctuation before the upward trend commences. So I'm just going to quickly go to the 4-hour chart and see what I see. So on the 4-hour chart, same scenario as the daily as the dollar index. You can see a beautiful wave bottom situation here, and you can see the positive divergence, which I talk about all the time. So whenever you see divergence, expect a wave bottom or a wave top situation to occur. This is a beautiful wave bottom situation, and you can see that our price has exceeded the third target and is headed for the fourth. Okay, so once the markets open later tonight, we are going to see what's going to happen. But for the rest of the week, our bias will be to go long, but I would prefer to see the fourth wave consummated before I think of buying. Okay, because sometimes the third wave can go as far as the fourth wave before meandering, and sometimes it stops around the third target. So even though everything points to the trend being bullish, okay, MACD is separated beautifully, the EMAs are separated, but we still have to get our third wave, okay, I mean fourth wave. So for those of you looking at the euro to buy, wait for the fourth wave to commence, and then once the fifth wave starts, you can get into this trade. Okay, at least from the third target here to the sixth is about 74 pips, so a little patience will pay in the long run here. So for the euro, our bias is to buy, to go long. However, the caveat is wait for a downturn, wait for a dip, okay, which is the fourth wave. And this dip could halt in this region because of the extreme level of support and resistance here, or it could very well come down as low as the top of the second wave. So you have to be patient. But if you can wait patiently, I believe that this will be a very good trade for you. And the lower it goes, the better for you, because say it were to come as low as the second area, the second wave area here, then that means that your target to the sixth wave target, the number of pips you make from just below the first target to the sixth target is well over 100 pips. So I believe that it is worth waiting for. So let's quickly go to the GBP USD and have a look at what we see here. And it's the same scenario, but I'm just going to quickly go to the monthly chart and speed run you through. So the monthly chart, we have a massive positive divergence situation going on here. But on the extreme right here, you can see that we have what looks like a first wave, with this being the second wave. So now we are just at the start of the third wave. And we have our parameters seem to have been fulfilled. We have our golden cross on the MACD. We have our golden cross of the EMA, though we have to give it another month or so to gain strength. Okay, and we have what looks like a wave bottom situation. But because we have this positive divergence situation going on here, I will want to see a little bit of a push down before the bullish trend commences on the monthly chart. So let's go to the weekly. And on the weekly chart, this is what's going on. Okay, so MACD has compressed and looks like there might be a little bit of congestion here before the market will resume the upward move. So you are going to have to be patient to wait for good entry signals. Okay, now this push up was orchestrated by the news on Friday. So we are going to have to wait for a push down to get a valid entry. Now that's on the daily chart. You can see that MACD is still trending along the waterline. Okay, but I think we have a golden cross here. So we have a golden cross on the EMAs as well, and you can see here we have a beautiful wave bottom situation on the daily chart, which if I were to plot will give us beautiful price targets. And I believe that this market has the potential to push as high as this, the fourth target at least, which is good for over 300 pips. So what we are looking for now is beautiful entry. Okay, now this trend line that I drew here on the daily chart, the market seems to have gone above it, but it hasn't consummated. So that means that we have the very likely chance of the market coming down to test this trend line. Okay, and so if we have the first wave here, second wave here, then I submit to you that once the third wave is consummated, we are going to have a retest of this trend line. So for the GBP, I'm going to say that my bias is to buy. Okay, so let's see what the market opening will create for us. So by Monday, tomorrow, you can find an entry and see if you can get an entry to go long. Okay, because the upward push on the GBP seems to be stronger than the euro. So we may get as high as the first, second, or third target before the market decides to give us any form of fourth wave fluctuation. Okay, so if you are thinking to buy the GBP, just wait for an entry, maybe go as low as the 1 hour, even as low as the 15-minute. Okay, for instance, this is the 1 hour chart. Okay, I'll be very happy to see a dip here. So probably a dip from this region. I would say if I get a dip that brings me to the region of about 1.314, I'll be very happy to take a long trade tomorrow on Monday. Okay, so for the euro, for the GBP, all you have to do is wait for a good entry. The bias is to buy. Okay, there's no need to be afraid of what's going to happen. The bias is to buy in the long term. Okay, in the long term. So MACD is crossed here, golden cross. The lines are separated, EMAs are separated. So everything points to this trade being bullish. All you have to do is just wait for a good entry point. Okay, And if you cannot find a good entry point, then maybe you should take a pass on the trade. There's no point in rushing so that you lose your capital. Just wait patiently. So let's go quickly to the New Zealand US dollar. And I'm just going to start from the monthly and see what we see here. So on the monthly chart, we had this massive push down. Okay, so we have a bearish candle. Okay, and the MACD hasn't crossed to give us a golden cross as yet, but you can see that we have this positive divergence situation, and you know what that means. That means that we are going to definitely get a wave bottom situation here. So that hasn't happened fully yet on the monthly chart, but let's go to the weekly chart and see what we can see. So let your bias be to buy. Okay, even though the trend looks as if it's bearish for now, please let your bias be to buy. Okay, because you stand to make more if you buy than if you were to sell right now. Because if we were to count waves, we have the first wave here, second wave, third wave. So this is the fourth wave on the weekly chart. Okay, and if we were to take our Fibonacci from the third wave beginning, you will see that we are getting close to the 62% region on the weekly chart. So even though it looks very strong going down, I believe that the trend is going to reverse shortly. Okay, so there's no point in struggling for 50 pips, 20 pips, 35 pips. Even if it's 100 pips, you can do better by waiting for this trend to turn around. Okay, this is one of the major currency pairs paired against the US dollar, and frankly, I'm surprised that the momentum push on the GBP and the Euro did not affect the New Zealand pair. Okay, it was supposed to actually mimic what the GBP and the Euro did, but you can see that this one is still going down. So expect a reversal, and it might be a very sharp reversal. Okay, so you are going to have to watch this closely to get an accurate entry, but you can see that we are getting close to the 62. So the 62% region here will be a very beautiful place for you to keep your eye on. So expect railroad tracks or a hammer bar on the daily chart at the 0.6433 region. Okay, so if we go as low as the 4-hour chart, let's see what we see. So I believe that waiting for a beautiful wave bottom situation on the 4-hour chart is the best way to get into this trade. So we are looking at the next day or so, probably in the next 2 days, between Monday and Wednesday, we should have a conclusive opportunity to get into this trade to go north on the New Zealand. Okay, so just exercise a little bit of patience. So let's go to the Aussie. Now the Aussie USD, I'm just going to go to the monthly chart and see what I see. So we have what looks like a bearish situation happening on the monthly chart here, even though we have this massive positive divergence situation going on. And let's go down to the weekly. So on the weekly, this is what is going on. So even though it looks as if the downward trend has resumed, until it breaks this region here, I'm not going to say take a bearish outlook on the Aussie. Okay, so even though we have the cross here and it looks as if MACD is about to cross, wait patiently until we go past this region here. Okay, the last region of support, it hasn't been broken yet. So I'm going down to the daily chart now and you can see what's going on. So I believe that the Aussie is supposed to mimic what the other major pairs with the US dollar as their counter currencies are doing. Okay, so I'm expecting a wave bottom situation here, but once it crosses this last region of support, then I may consider a bearish trade, okay, in the long run. But for now, I'm just going to wait to see what will happen here. I believe that we are going to get maybe a hammer or spinning top or railroad tracks on the daily. So the New Zealand, the Aussie, you should wait for a reversal candle to appear on the daily chart so that you can get a valid entry signal, probably on the 4-hour chart. So let's go to the USD card. I'm just going to go to the monthly chart here, and you can see on the USD card, making it let's make it bigger. We have a push up from the region of support. Okay, we even have the confirmation of the golden cross on the EMAs here. All right, even though the market seems to be congested, but on the monthly chart, our most current candle is bullish. So let's go down to the weekly, and the US dollar is probably falling for at least the next month or so. So this push up in price on the USD card, I submit to you, is going to be short-lived. All right, it's going to be short-lived because we had this peak here, and so far the market has not been able to go beyond this peak. Instead, it created a series of wave tops. You can see the big one here, you can see the smaller one here, another one here, another one here. And so for the USD card, I think I will wait to see what's going to happen. If it breaks above this trend line, then fine, but it cannot do something opposite of what the US dollar index is doing. So I believe that this week, let's just wait to see what's going to happen. Okay, so progressively over the past couple of months, we've seen the market turning around at this region of extreme resistance. So between here and where the trend line is, which is about what, 40 pips, I believe that we are going to get something that looks like probably a negative divergence to price, then a wave top situation, or just a wave top situation, and then the market will fall through. So for this week, watch the USD card. Okay, don't think of buying just yet. I believe that the upward momentum has lost the steam it needs to go further. So just wait for a turnaround in price. Okay, so your bias on the USD card should be bearish, just like the dollar index, but you are going to have to wait patiently for a few days. Okay, don't be in a hurry, just wait for a few days. I'll just quickly go to the 4-hour chart and see if I can see something. And you can see already that the market is beginning to show signs of negative divergence. Okay, this is not a proper one. Don't be deceived. Just wait patiently until you get a valid signal. So if I were you, on the dollar, on the USD card, I will wait to get valid signal to go short on the daily chart before I consider any move here. Okay, so let's go to the USD CHF and see what we see. This is the 4-hour chart, so let's begin from the monthly. And you can see that on the monthly chart, we already have our wave top situation going on here. We have the confirmation of the EMA cross. We have the golden death cross on the MACD. We have the death cross of the EMAs here. So as far as we are concerned on the monthly chart for the USD CHF, we are bearish. Okay, so if we were to look at price targets, our next target will probably be in the region of 0.9245. okay, that is about 340 pips away. So let's go quickly to the weekly chart and see what we see. So this is what is going on the weekly chart. You can see this massive wave top situation here, and then we had another smaller one here. So if we were to go by the smaller one, this is what we have. So the market seems to have consummated 3 price targets already. Okay, so how do you get into a trade like this? You had the golden cross of the MACD, you had the golden cross, so everything points to this trade being bearish, but we are expecting to get into a 4th wave. So I'm just going to go to the daily chart and have a look. So this is what is happening on the daily chart. Okay, so we have some congestion going on here. All right, so the best thing to do is wait for another wave top situation to form here. So when you get a wave top situation here, you can probably go to the 4-hour chart to get an entry. We already have a wave top situation on the 4-hour, but in this case, if this is the first wave and this being the second, we are currently in the 3rd wave. Okay, now this is a region of support, even though it's not very strong, but hopefully this should give the market enough oomph to push into a 4th wave. So if you are going to be looking at the USD CHF, you are going to be thinking sell, but what you are going to do is wait for a retracement. Okay, hopefully to get to the region of the 2nd wave. All right, and then you can get an entry point to sell, but everything points to this trade being bearish. Okay, so USD CHF bias is to sell. Just wait for a good entry signal, possibly on the 4-hour chart, and if you are patient, you can actually wait on the daily chart. Okay, now let's have a look at the Japanese yen, USD JPY. I'm just going to go to the monthly, and so this is what's going on the monthly. You can see here that the upward move seems to have been arrested, and progressively for the past 2 months we had a bearish situation going on. MACD is quiet along the waterline. Okay, we have what looks like an inverted hammer slash spinning top here, and that's a reversal sign. So I'm just going to go lower to the weekly, and on the weekly chart, this Fibonacci retracement I took here, you can see where it ended just after the 62% retracement area. Okay, we had the railroad track there, and then the market seems to have reversed. Same thing like the US dollar index. Okay, MACD looks like it's beginning to form a death cross. Not quite yet. The EMAs are just about to form a death cross. So this week that we are going into will tell us conclusively how to get into the US dollar. On the daily chart, we already have our EMA death cross and the MACD death cross. Okay, so we had the valid wave top situation on the daily chart. I'm just going to take my calculations there and see what happens. So taking the calculation from here, I believe this area is good enough. So we are just at the first target right now. Okay, so for the USD dollar, for the USD Japanese yen rather, what you are looking for is an entry point. Okay, so you can see here on the 4-hour chart we have a MACD death cross. Even though what we had here was a bounce on the EMAs, it still counts as a death cross. Okay, so what you are going to wait for patiently this week is a bounce. All right, a bounce to give you an entry point. And the best way to get the entry point is going low to the 1-hour chart, and you can see that we already had another wave top situation here. So the best way to look for an entry point is to take this well, I will take it from here because I'm looking at it from the 4-hour perspective. Okay, but going to the 1-hour, just take it from here and put your line here at the 62% region. Okay, so if you are watching the USD JPY currency pair, your bias will be to sell, but you are going to wait for a retracement. Okay, possibly to the 108.81 region. It may not get as high as that. It may just get to the 108.61 region and then reverse. So but the best way to get into a trade on the USD JPY this week is to wait for a retracement. Okay, so that means that for the USD JPY, for the USD CHF, we are waiting for a bounce up in price, right? All right, so what else do we have here? 1 2 3 4 5 6 7. Okay, so we've conclusively gone through the major pairs, and as long as you keep your eye on what the USD dollar index is saying, you should be okay. All right, so very good trading opportunities this week on the USD CHF and the USD JPY, possibly on the GBP as well is good. Okay, New Zealand and Australian US dollar may take probably a day or so before we get conclusive evidence on the direction to go. So keep your eye on the euro, the GBP, the USD CHF, the USD JPY. Okay, and I think that this week will be great for all of us. So profitable trading to everyone, and thank you very much.